Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by Ed Carson. And on today's show, we'll take a look at another day of selling, at least on the Nasdaq, as bond yields rose again. So seems like that Nasdaq could be worried about rising bond yields. But before we get into all that, Ed Carson's got three stocks to watch for us today.
Yeah, I wanted to take a look at three stocks, two of them showing some strength, Caterpillar and ATI, as that side of the market was doing well, but then growth stocks did not do well. Moderna, which had been looking really well, dived below a buy point.
Okay, well, let's start. I guess we're going to first start by taking a look at the S&P 500 index. Selling fairly muted in the S&P 500 today, down just about 0.4% at last check. But Ed, this is still, a challenged index. Recently got turned away at the 200-day moving average. Now it's below the 50-day line. Still looking at a lot of overhead supply issues here.
Yeah, getting above the 50-day line would just be a first step, and that. The 50-day line keeps rising, it keeps on drifting below it. It was really a divergent market. The overall market was sort of neutral, but it was definitely sort of a hot and cold kind of market, or at least a lukewarm and cold market. And so this was the average, but it was a lot of divergence. We haven't seen that divergence. That was sort of a 2021 situation where we'd see this sector rotation. We're starting to see that again with growth being very weak and a lot of the industrial and metal kind of names doing well.
Yeah. Well, let's move again to the Nasdaq composite, where most of the selling was centered today because we did get a big jump in Treasury yields. I know the last check that 10-year yield, which we'll look at in a second, was up about 10 basis points to 3.85%. It has really stormed off lows here, but the Nasdaq composite, Ed, bears the brunt of the selling. I guess cold comfort is that it did hold above Thursday's low, which isn't saying much, but I guess we'll take it.
Yeah, there were some really big losers on the NASDAQ, and yeah, it was nice to not get underneath there. It's not very far from a closing low for the bear market. I mean, if it had closed at today's lows, it would have been the worst close in 2 years. So not very positive action. And when you have to tell yourself, well, we were only down 1%, that's just not where you want to be in something that's claiming to be a market rally.
Yeah, I mean, the relentless selling continued in Tesla today. I know we're going to look at Moderna in just a little bit, but and chip stocks just can't get out of their own way. We had a warning from Micron last week, and semiconductor stocks remain under a lot of selling pressure. All right, well, the bright spot today was the Dow Jones Industrial Average. That eked out a small gain here as it holds support at its 50-day moving average. And Ed, this definitely seems to be blue chips, large cap stocks, sort of an area of the market where investors seem to be putting their money.
Yeah, this is the strong area of the market. I will note for the second time in a week, it hit resistance at the 21-day line. So it's not powering higher anymore, but it is holding support. And yeah, I mean, a divergent market is going to be interesting. Are we going to see the NASDAQ and the growth stocks drag everything down, or are we going to see the Dow and the industrials and some of those names pull things up? Today wasn't particularly encouraging on that front. But it's something that we have to watch for probably in the next few days.
All right. Well, there's an interesting ticker here, RSP, that we want to look at. Ed, why did you want to take a look at this equal-weighted S&P 500 ETF?
Well, because the equal weight, which sort of strips out some of the, so all the components are treated equally. So, your Apples and Microsofts, your Teslas, NVIDIAs don't have the same kind of weight that they do in the normal S&P 500. So this one held up okay. I mean, it tried to get back. It actually was above the 60-day line intraday, rose fractionally. So that does show you there's a little more strength. I mean, it wasn't like it's powerful, but once you get outside some of these titans in the growth sector, there's a little bit more strength in the market.
Yeah, I'm just checking breadth today. Wasn't too bad. I mean, at last check, I think advancing stocks outnumber or declining stocks outnumbered advancers by less than 2 to 1. So it wasn't a day of horrible breadth where declining stocks trounced advancers. All right, a couple of or let's look at that 10-year yield, 0TNX, because this has rallied off lows and it actually gapped above the 50-day moving average today. So money flowing out of bonds and lifting yields.
Yeah, and that's not a great sign for growth stocks in particular, because if you discount future growth based off of basically interest rates, that future growth doesn't look as impressive. Obviously, we're worried about the economy. Fed odds haven't shifted a whole lot. Maybe there's less of a chance that we'll have just a quarter point hike in February, but a long way before we decide that. That's still the what markets are expecting. Yeah, this has rebounded quite a bit. Some of it's because of China, I think, because if that's reopening, maybe you feel like global economy will be a little stronger than you thought a couple of weeks ago. But yeah, I mean, every time you think that there's something going well, I mean, if you start feeling better about the future, well, treasury yields are probably going to come up, and that might nip the optimism pretty quickly.
All right. Well, mining and metal stocks were among the day's best performers today. XME is the Spider S&P Metals and Mining ETF. It was up nicely, but sort of this broad market pulled it down near its session low. Managed a decent gain, but gave back a lot of early gains.
Yeah, and XME has a lot of interesting things because it's not just steel and traditional miners. It has gold miners. It has some coal plays. So this is fairly diversified in that sort of whole commodity digging things out of the ground and maybe smelting it a little bit. So one to watch for sure.
Okay. And then XLI, another ETF in the news today. XLI is the ticker here.
Similar action in the sense it's been finding support. It's off high, so it's not doing great, but it's one to watch. I mean, this is why the Dow is sort of more relevant right now when you look at things that are in that industrial space. I mean, Caterpillar is a Dow component. It's a big player in XLI. So this is still doing relatively well.
Yeah, looks very similar to the Dow Jones industrial average, which you just showed is finding support at the 50-day moving average. And then we mentioned the broad-based weakness in tech stocks. That has been one reason why the Nasdaq has come under renewed selling pressure in recent days. And we mentioned a bad warning from Micron last week, and Nvidia in the Nasdaq 100 was one of the worst performers today in the Nasdaq 100. It's a top-weighted stock in the SMH, right along with Taiwan Semiconductor TSM. So seems to me, Ed, that if this Nasdaq is going to get going, it's going to need to see some sort of life in these semiconductor stocks, but that might be a tall order in this market.
Yeah, but that's exactly what we're not seeing. This was so encouraging when this was sort of coming up. So when the S&P was moving higher, everything was looking really good that right at the open there. And ever since, things have looked terrible for chips, looked terrible for growth, and looked pretty unsettling for the overall market.
Yeah. All right. Well, let's have to run through the indexes and the ETFs here. We mentioned the outperformance of the Dow today. A big reason for that outperformance was a nice day from Caterpillar here. CAT. We know, Ed, that the market environment has not been that friendly to technical breakouts, but Caterpillar did break out today, so that's good to see.
Yeah, I mean, it's really tricky to buy off of breakouts. I mean, you could have tried to buy it somewhere in here on one of the other days, but those would have been tricky too. I mean, if you tried buying it off of some of these things that came right back down, it is only 6% deep. So it's not like you're talking about a 30% deep. This huge base. This was a pretty deep base, pretty long and going straight up. This was riskier here. And there was just like, boy, it seems like a pullback had happened. And it did. It wasn't that bad. But this is often what happens. You get a nice tight base just above or just next to a deeper, wilder base. So you could play this or play an ETF off of that, just knowing that you would definitely want to keep your position small and know where you're going to exit, like say the 21-day line or some place that you can get out with it without getting burned too quickly.
Yeah, that 239.85, that recent high there looks like an actionable pivot, and you can see the CAT is still well within that 5% buy zone. So Caterpillar looking good here. All right, let's move on and take a look at another metals stock here, ATI. This is a company called ATI. I believe it used to be called Allegheny Technologies. ATI is a symbol here, and we've got a trend line, a stock that outperformed today and actually closed up near its session high.
Yeah, this was nice. You could see this trend line that it broke. It was still relatively close to the 50-day line. It's getting a little bit off of that now, but you could have bought it off of this trend line. This 31.74, that sort of marks the top of a handle. It's a little messy, but that would be, that would be really the official buy point, 10 cents above that. Just like with Caterpillar, the relative strength line has been hitting record highs or at least multi-year highs. I think this is a 3-year high for ATI. As you can see on this chart, so it's been on a weekly, or it's even longer. Yeah, this one is a long-time high, 10-year high or so for this one. This is an area that has been strong. You've got to see some solid growth in here. Should be decent growth next year as well. So there's a lot to like about this name.
All right, ATI breaking out over a little trend line here and still just below, just below that 31.74 pivot. Not much volume today, but we've been talking about this low volume time for the market. You see volume did pick up quite a bit from Friday, so ATI looking pretty good here. And finally, let's take a look at Moderna. RNA. This is a stock that recently announced really, really good news along with Merck regarding a cancer treatment that they're developing together. That news fueled a nice breakout here, and just goes to show you what a difficult environment it is, Ed, for for technical breakouts.
Yeah, this one looked really strong. It was 20% gain that day on news. I mean, when you talk about, boy, maybe if this drug and if this company can cure cancer, well, this was a cancer vaccine. That was really positive. Then it continued going, but then it consolidated pretty well. So even through Friday, just before Christmas, you're thinking, okay, that's holding up pretty well. And then boom, right there, right through the buy point, right through everything. A round trip to 15% gain now from the top. Definitely a very strong sell signal. I mean, technically, it hasn't gone to the automatic sales signal area, but that is just absolutely what you don't want to see. It just shows you that you have to be cautious in this environment, even when there's such good news, even when there's that positive action. Look at that tremendous volume. It's just really tough right now.
This was almost a 10% decline from Moderna today, and I didn't see any news. I didn't see an analyst downgrade. Just seemed to be, just broad-based weakness. So tough day for Moderna, but again, just underscoring what a difficult environment it is for stocks showing strength, where big gains one day or two can result in stiff losses the next. So still a very tricky environment out there. Ed, thank you very much for your insight. It is a shortened week of trading, only 3 days left, Wednesday, Thursday, and Friday. Typically, it's historically a good time of the year for the stock market, the final trading week of 2022. So we'll see if we can get some sort of rally between now and the end of the week. I know the bulls are holding out hope for that. But until then, if you haven't checked out IBD Live, be sure to do that. You can go to investors.com/IBD Live and check out a 2-week trial. This Friday, we're going to have Charles Harris, a portfolio manager with William O'Neill and Company. Always like getting his market insight. That's going to be Friday's guest. So be sure to sign up for IBD Live and check out the show if you haven't done it yet. We start every morning 10 minutes before the market open each day and bring you up till about an hour and 15 minutes, hour and a half. So we'll see you there tomorrow. Until then, Ed and I will be back here tomorrow for another Stock Market Today video. So we'll see you then. Take care, everybody.